Today I'm going to be talking about whether it is time to sell a stock and when is the best time to sell. And I've looked at a few of my favorite famous investors such as Warren Buffett, Peter Lynch and others. Now I thought this would be a good topic for a video because this is something that I've notoriously failed to do. After all, a lot of my holdings, at least my biggest holding in my portfolio, is down 60 to 70% at the moment, and surely at some point the idea should have come across to sell. So this is something that I've personally made a mistake on before, and we're going to talk more about it. And naturally, recently in the news, we've seen Argo blockchain decline by 20% today. I mean, it is down significantly over time, but they've had an update here where they've had to raise $27 million to ease liquidity pressures. Now, I'd seen this one coming, although yes, I still lost a lot on this investment because I didn't understand what I was investing into. Interestingly here, they had sold 3,400 of their Bitcoin mining devices, and I'm pretty sure they're selling it at a significant discount to the purchase price of them as well, which is obviously a negative sign. They still hold quite a lot of Bitcoin on their balance sheet, and I don't think they're putting this down, but this is what they get when they open up a short-term loan at a very high interest rate because they are effectively betting on the markets to be good. Now they're seeing a squeeze with the fall in cryptocurrency prices and the rise in energy prices. This is certainly screwing them over, but I figured, you know what, in my portfolio, if we go look at it, now you'll notice here in the third line I've added Argo blockchain in. I do not hold any shares, but you'll notice that my current or my price that I bought them on average was £1.88 per share. Now this is particularly interesting because at the moment they're trading at 27 pence per share. If I had neglected, right, and I hadn't sold out at 94 pence a share, which is pretty much bang on a 50% loss, I'd be sitting at an 85% loss, which is significant. Now, it is important that you sell fast, and that's something I have neglected to do. There's the famous saying in business: hire slowly, fire fast. Research your stocks, do plenty of research and buy slowly. Identify what you think are key players in the markets and wait for a good price. But if that decides to drop and the story fundamentally changes, then sell quickly. And that is something I didn't quite do with Argo blockchain. They were taking up a lot of debt at the time. They were very much leveraging a bet on Bitcoin, and guess what? It hasn't played off. If I'd have left that, I would have been down £6,400 versus about £3,200 that I think I took a loss on back when I initially sold. Now, we're going to look a bit at Warren Buffett here. And Warren Buffett has said sometimes if they need the money to move into another sector, they will trim some holdings. So there is a merit in selling a business that you do like already. And this is something that I'm going to try and adapt in my strategy. None of my holdings are winning at the moment, and I haven't seen any other opportunities that I would switch from. However, let's say the positions are reversed. Let's just say my positions in my portfolio are break even, right? Let's say we've got that total invested value of Boohoo. Boohoo might increase by a few percent. And I might go, actually, I'm going to trim back a little bit of this position and start opening a position in Dunelm Group. Now, by doing that, I'm not turning my back and saying Boohoo is a bad investment, as Warren Buffett is saying, but instead what I'm doing is I'm saying, okay, look, I haven't got the capital available, so what I will do is I'll transfer some of that funds into another company that I feel that might do a little bit better at the moment, and after all, diversification is a good idea too. And they, as Warren Buffett says, things are all wonderful businesses or we wouldn't own them. Now, this goes on here, and he says that top slicing is seriously, if a security is seriously overvalued, then top slicing it as well could be good. Boohoo was at 50 times price to earnings ratio back in 2020, or even after, when I believe they had the modern day slavery accusations, right? I could have at that point done a fair value estimate, and perhaps I wouldn't have started buying Boohoo at such a higher price. Perhaps then I would have gone, okay, you know what, on average in the markets a stock can trade at about 15, maybe 20 times in the US markets. Therefore, to see Boohoo floating at around 50 times, that means we're paying a substantial premium. That means it would take 50 years for profits to return to this investment. So perhaps I should hold off a little bit. Perhaps I should be a little bit more vigilant. Perhaps I should put only very small sums of money into this stock if I'm very interested. But at the same time, I think I should be looking for other opportunities elsewhere. Obviously, this is very easy to say in hindsight because it's already happened. I now know that Boohoo has declined significantly. As we can see in my portfolio, it's down 70%. The 5-year picture is even worse, right? We can see that pattern and trend already, but it is worth keeping in mind. How do you sell? And Peter Lynch here has 2 reasons for selling a stock. The story has played out as expected, and this is reflected in the price. For instance, the price of a stalwart has gone up as much as could be expected. You've bought an investment and it has gone up as much as you expected it would do, therefore a good time to sell is then. That goes back to the top slicing point. However, another very important point here is if you don't buy a quality stock that Warren Buffett mentions here earlier, if you don't buy a stock that you're going to buy and hold forever, and perhaps you've made a mistake in your research or your valuation or your strategy approach, and that needs reflecting, then something is played out in the story, fails to unfold as expected, or the story changes, or fundamentals deteriorate. For instance, a cyclical's inventory start to build, or smaller firm enters a new growth stage. Now, this is interesting, right? Because this means in that situation that you would need to perhaps identify if your company is seeing fundamentals deteriorate. Don't get me wrong, let's go back to Boohoo here. And I had forgotten to leave the article open, I apologize for that. But if we go back to Boohoo here, yes, their balance sheet had deteriorated, but they are still very liquid. Yes, we've seen profits disintegrate, albeit we've also seen that in the industry. But we have also seen total sales fall. Again, this is a trend that is repeated across the industry, and actually there is the common concern here that the revenues are falling or their total sales are falling because of a higher level of returns rates. But actually, when you look at the volume of their products, their volume, or at least their demand, pretty much quantified in the amount of items purchased, is actually higher. So therefore there is still growth there, and therefore the fundamentals aren't necessarily deteriorating in a way that might want you or might justify your reasons for selling. I think that's a good approach to have there. We've also got Nick Sleep here that also mentions the idea that don't pick the flowers, or this is what Peter Lynch likes to say, don't pick the flowers and water the weeds. Just because you've got a winning stock that might be up 50%, okay, trim some profits if you'd like to, but don't necessarily sell that stock to buy one of your stocks that are completely underwater. It might be a ridiculous notion right now if I was up double my money on Ashtead Group, which I was in the past, to therefore sell my entire position in that stock, which is actually something I've done. I did double my money in Ashtead Group, and then I did buy Boohoo. Boohoo could be considered a weed at that point in time, and Ashtead could be the other way. It's all there. It's all part of the process, and there is a lot of thinking to be done. And I think realistically, you've got to have this plan in place when you're investing. You've got to understand, okay, I've bought this stock. Have I made a critical mistake here? Is it too late to sell? Because in reality, I don't think it's ever a point where it is too late to sell. Sure, selling at some point does become less worthwhile. It's more advantageous to sell quickly. But that said, I've managed to prevent myself from a further loss by selling Argo blockchain when I did. As I say, I sold it at 50% loss. I could have been down nearly 86% now, or a majority of my capital. Effectively, at that point, a lot of my money is wiped out. There might be $1,000 left in that position. And even then, at that position where you're down 85, 86%, perhaps then you might save that final £1,000 if you think there are significant liquidity concerns, and the fact that Argo blockchain are having to raise capital by selling the machines that generate them their revenue, then maybe you would be like, okay, you know what, I'm going to sell out here. I've taken an 86% loss. It's going to bruise the ego. But at the same time, you know what, I've still got $1,000 left. I can walk away with some money rather than riding this to zero, because at the end of the day, I'm not a gambler. I'm an investor, and I accept that I've made a poor investment. I think ultimately it's about adapting your investment approach and never believing that you are better than the markets. I think the ego can play a lot on how you invest in the stock market, and once you become very comfortable with the returns you have or the performance you've had, I think you are then susceptible to failure. And I think at that point you're more prone to be making mistakes. You're going to be overzealous, you're going to be overconfident on investments, and you might do what I've done, where I only hold 2 stocks in my portfolio, whereas in reality a good rule that Warren Buffett had in place when he was managing just under $500 million was to never have more than 40% in a single stock. And I think that's a rule that I'm certainly going to shift towards as my portfolio starts to recover. As I start to build up 2 or 3 other positions, I will then limit that top side and say, you know what, look, if it's over a 40% position size, I'm going to cash out a bit here. Obviously, both my stocks at the moment are over that amount, but I know what I'd like to take an approach, and I know what I'd like to do going forward. It's just a case of moving it and shifting it into gear and putting that strategy really into place. Have a fantastic day.